Well, Canada's reciprocal tariffs on $21 billion worth of American products are in effect as of today. Canada's Department of Finance warning, quote, unless U.S. tariffs and other unjustified tariff threats are addressed, Canada will apply counter tariffs on additional imports from the U.S. on April 2nd. The European Union also planning reciprocal tariffs on $28 billion of U.S. goods come April 1st. The president today vowing to respond. President Trump saying at the White House yesterday he will respond with additional tariffs.
As you know, we're going to be doing reciprocal tariffs. So whatever they charge us, we're charging them. Nobody can complain about that. I'll always have flexibility, but there will be very little flexibility once we start. April 2nd is going to be a very big day for the United States of America.
As the potential trade war continues to heat up, I want to bring in Tuan Nguyen, RSM's US economist. Tuan, it's great to have you on here. I'm wondering where you are finding clarity amid this constant tit for tat on tariffs, on just how much of an impact it could have on our economy to have this policy uncertainty.
I don't think we're seeing much clarity, especially with the news today, on what's going to happen to European goods. And what we are really seeing right now in real time is the short-term pain, as you call it, from higher tariffs or the threat of higher tariffs on inflation, GDP, and financial conditions, like with the sell-off that we saw last week. And we have been very clear on the negative drag of higher tariffs on inflation and GDP, but I don't think anyone could have foreseen the kind of back and forth shifts in policy decisions on what countries we want to impose tariffs on, what products, and at what time, like the one that we're seeing at the moment. And I think we are really turning tariffs into a zero-sum game, just like a game of chess. When there has to be a winner, there has to be a losers. Otherwise, there would be a stalemate. And I think this is quite dangerous because the U.S. is willing to sacrifice short-term gain or like sacrificing a piece on the chessboard. But there are still many moving pieces on the board that I don't think we have calculated all the variation for this end game, and the financial market doesn't like this kind of uncertainties. And for our clients, especially the ones who have exposure to international trades, they are not also a fan of this kind of volatility.
Tuan, I wonder, as you're running your modeling, given kind of the fast and furious tenor that we've seen from the administration and leveraging tariffs either for kicking off negotiations for fair trade deals or just trying to ensure that there's some kind of elbowing and boxing out that's taking place early days in the administration. All of that considered, as you're running your modeling, how long until we see material impact from what you can forecast at this juncture?
In terms of inflation data, obviously in February, we didn't see a material pickup in terms of inflation from imported goods because we haven't seen tariffs on Chinese goods yet. We haven't seen tariffs on Canadian and Mexican goods yet. But I think in March and April, we're going to see a pretty big pickup in terms of inflation. And that's going to be quite troubling for the market because the type of slower spending that we saw in February is not going to last in March, especially when you look at the retail sales number. All the forecasts at the moment are pointing to a pretty sharp increase in sales for the month of March. So our approach at the moment is we really need to be cautious when it comes to inflation data and when it comes to spending data. I think for our clients, we think we should be a little bit more defensive. Hold on to what we have at the moment and do not overreact to 1 month worth of data.
So that sounds like growth scare, but that doesn't sound like contraction. Are we reading that right?
No, I don't think we're going to see a recession anytime soon, even though we have upgraded our recession probability to 20% from 15%. But in the next 12 months, we still don't think that there's going to be a recession because the labor market remains very solid at the moment, especially given the recent job opening data. And I think this time again, it's going to be very similar to 2022 when the labor market will come to the rescue when it comes to recession scare.
Tuan, always great to grab some time with you. Thanks so much for joining us this morning.
Thank you.